Nvidia's earnings report coming May 28th is shaping up to be one of the most important events on the calendar this year. If you've been following the AI boom, you know Nvidia is right at the heart of it. Their chips power so much of the AI revolution, from data centers to cloud computing, and that makes this earnings report something everyone is watching closely. So, what should we expect? And why does this really matter for investors? First up, the revenue expectations are pretty impressive. Nvidia is forecasted to report revenue around $43 billion, which would represent a massive 65% increase compared to the same quarter last year. When you're already a giant like Nvidia, that kind of growth is remarkable. It's a clear sign the demand for their AI chips, especially in data centers, is incredibly strong and shows no sign of slowing down anytime soon. This revenue number alone tells us a lot about how dominant Nvidia remains in this space. Now, let's talk earnings per share. There's a little bit of a gap between the numbers depending on whether you look at non-GAAP or GAAP figures. Non-GAAP EPS is expected to be about 93 cents, which strips out some of the one-time costs and gives a better picture of ongoing profitability. On the other hand, the GAAP EPS estimate is lower, somewhere near 73 cents, mainly because Nvidia is taking a big $5.5 billion write-off related to export restrictions with China. This write-off weighs down the GAAP number, showing there are real-world challenges Nvidia is facing, beyond just sales and profits. Why is this distinction important? Investors often focus on non-GAAP earnings because it reflects how the business is really performing, excluding those big one-time hits. But the GAAP number is a reality check. It reminds us that Nvidia has to navigate complex geopolitical issues like export controls and trade tensions, which can impact their bottom line in a meaningful way. The main reason behind these strong numbers is Nvidia's near total dominance in the AI chip market, especially for data centers. The company controls about 98% of that market. Their latest Blackwell architecture has become the gold standard for AI workloads. Big players in the cloud space, companies like Microsoft, Alphabet, and Oracle, are all doubling down on AI infrastructure, investing billions in chips from Nvidia to power their services. This is why Nvidia's data center revenue is expected to make up about 90% of total sales this quarter. The demand is simply massive. Looking at the stock, the market has already started pricing in these strong results. Nvidia's share price is up about 27% over the last few weeks leading up to the earnings report. If the company meets or beats expectations, it's very possible we could see the stock push even higher, maybe toward $124 to $150 per share. That would be a big move and would reflect the excitement investors have around Nvidia's growth potential. But don't forget, the stock has been volatile this year. It dropped about 44% between January and April, which is a reminder that even the best companies face risks. With something as complex as AI and geopolitics involved, there's always a chance of surprises. So, while optimism is high, investors should stay cautious and keep an eye on the details. Going forward, the most important things to watch will be Nvidia's guidance for the next quarter and what management says about the export restrictions and supply chain issues. If they can show continued strong growth and suggest that trade tensions are easing, that could provide a powerful catalyst for the stock. In summary, Nvidia's earnings report is shaping up to be a major event that could confirm why the company is one of the most important players in tech right now. For investors who believe in the long-term potential of AI, this report is a key moment. It's not just about the numbers. It's about understanding the story of how Nvidia is positioned to capitalize on a massive and growing market. If you're an investor in Nvidia or just following the AI space closely, this earnings report isn't something to ignore. It's going to give us valuable insight into how strong demand really is, how management is navigating global challenges, and whether Nvidia can maintain its lead in one of the most competitive spaces in tech. As always, I'm watching not just the numbers, but the story they're telling, where the company is headed, how they're allocating capital, and what this means for long-term shareholders. Whether you're already invested or just keeping Nvidia on your watch list, this is a moment worth paying attention to. Thanks for watching. I'll continue following this closely and breaking it down with a long-term mindset. Until next time.